Greetings, welcome back to the Drummond channel on January 31st, around 5:30 on the East Coast, and want to update the S&P contract and what we were looking at, and we're using the Holy Grail software to see how things see how things played out after the Fed's interest rate decision. And you can see how the Holy Grail software mapped things out, gave us some support areas and some resistance areas, and that would have given us an idea where to put a stop. So let's get started. Just to refresh our memory. We on the monthly chart, we're in the area of the oncoming, and on the weekly chart, and then on the daily chart. And the thing, we had a wall forming on the daily here, and it did bounce a little higher, and it held yesterday, or I'm sorry, the day before, and then it held yesterday. So all this action's taking place in three different levels of resistance: monthly, weekly, and daily. And on top of that, this is the yearly envelope top, and we're still in the area of the quarterly envelope top. And now what do we make out of this problem here? Not a problem, I suppose. It's what happened. The market gapped down last night. Some earning news. Not a huge surprise if you're looking at this area for resistance, right? There's, again, monthly, weekly, daily, all in the same area. And the market gapped lower. And then, obviously, we finished way down here. And this is interesting. Now let's take a look at the 240-minute and the hourly chart. And with the gap down after the close yesterday, you see these C waves in the 240, pushing this market down. And this is about the time of the open for the 04 on my chart is 04 to 08 in Hawaii time. And that's this block over here on the hourly chart. So prices were moving down, and I don't know that I'd get crazy about getting into the market ahead of the Fed's decision. So what's more important or more relative is how did this Holy Grail behave after the Fed released its information? So it's 09 this morning in Hawaii. This is when they released the info. So this bar here is the equivalent of these two bars here. And look at how the wall had been steady here in this hourly chart all morning until the afternoon. And then they had the release. And again, the oncoming held again. So that's a very, very good sign that this market is going to continue lower. And you can see over here on the 4-hour chart, prices got up above the envelope, but it's still below the daily PL dot. So daily PL dot resistance, the center point's here, the 240-minute envelope top is here. So right in this area, again, this is where this hourly bar reacted. And change colors here. So the hourly went all the way up into the oncoming. The oncoming held, came down here, closed just a bit below the envelope bottom, so below the center point. So now this is a sell. And going short on the close of this bar, knowing that it closed below the weekly envelope top, it closed below the daily envelope bottom. So shorting this market in here is a high probability trade, and putting a stop up above where this market has been holding, depending on what your risk preference is. So it gives you a good idea that these areas we're holding, and especially this bar closing down below its PL dot, shorting this market at the open of the next bar. I'm going to leave this now. This was a quick update. I want to show everybody how things played out through the eyes of the Holy Grail. And during volatile times like we're going to have today, I tend to zoom out a little bit to eliminate the noise. So I'm looking at the 60-minute and the 240-minute combination. And you can fine-tune that probably with the 15-minute. So that's it for today. If you have any questions, please leave them in the comment section, and we'll see you again next time.